Hi guys, Kayam here, Chief Currency Strategist from Alpha Play. If you have been following us for some time, alright, would like to welcome you back to another video. If you are first time following us, what we basically do over here is that on a weekly basis, I'll be sharing with you some of the insights into the upcoming market potential, and hopefully through this process, you'll be able to learn and develop some skill sets for yourself as well. Alright, before we jump into next week market potential, I'd like to first walk you through this topic in terms of risk exposure, alright, because one of our signal clients actually asked me if, let's say, if we receive signals, alright, or even trade ideas that have very close correlation among each other. For example, over here we have CAD franc, Aussie franc, and New Zealand franc, alright, basically they are closely related simply because Canadian, Australian, and Kiwi, they are all commodities currencies. They perform generally well when the risk appetite is good. Alright, basically in a risk-on environment against franc. Alright, and if you look at the direction, all of them are in the bullish setup. So if you decide to take all three pairs on a usual basis, alright, if you risk 2% per trade, over here you are risking 6%, so you have a 6% risk exposure with a rather similar idea riding on the commodities currencies. Right, so as a trader, as a risk manager, you wouldn't want to do that because you are risking too much on a single idea. Alright, so what we can do is generally there's two kinds of approach. So the first one is out of this three trade, you might simply want to choose one trade. Alright, maybe if you look at these three setups and you feel that Australian franc is of a higher probability setup, you might want to just take the Australian franc. Alright, the other approach that we adopt, alright, is to lower our risk per trade over here. So usually we have 2% per trade, but what we want to do is if we have three ideas over here, alright, instead of 2% per trade, we use 2% divide by 3, alright, that's around 0.6%, and that's what we're gonna use it for each of this individual trade. Alright, so if all of this trade ended up with a SL, alright, we're getting stop out, what we will lose is simply 0.6 times 3, that's about 1.8, alright, and it's just close to 2%. So this is one general approach that you can adopt regarding risk management. Alright, so with that, let's jump to the weekly analysis. Alright, so if we look at the calendar for this coming week, the focus for tomorrow will be Caixin manufacturing from China. Alright, but the main bulk of the focus will be on Australian cash rate and the RBA rate statement coming in at 12:30 Singapore time. This is something definitely if you are trading the Australian or even New Zealand currency, you need to be aware of. Alright, ending off with the day or even early in the morning is New Zealand GDT price, and that's as well as its unemployment rate. Right, something to look out for. Other than that, midweek there isn't much of a focus, but until Friday, that's where your US NFP as well as the average hourly earnings will be released. Right, some hint for you guys is that for us we are very bearish on the US. Even though last week FOMC statement, the Fed are pretty hawkish in terms of the tone of the particular statement, but in terms of economic indicators and data, it's not performing well in the US. Alright, so we are still pretty bearish. Having said that, we do not expect a rate hike in June. Alright, so having said that, that's a disclaimer. That's just our piece of opinion. Alright, don't take that into your own personal trading decision. Right, do your due diligence and research into it. Right, so having said that, let's focus on Aussie. Alright, and I want to bring you to the pair on Australian dollar. Alright, so for this particular pair, what I want to focus on is we have a multiple setups coming in here. Alright, the first one is oh, my indicator's not there. Let me pull in my RSI. Alright, relative strength index. Oh, right, over here. Alright, let me set it up to the proper. We'll use a period of 7 with extreme levels at 80 and 20. Alright, so what we use exactly, alright, period 7, extreme level 80 and 20. So what we see over here is that price forms a high high, alright, but in terms of RSI, it forms a lower low. Alright, so what we call this kind of event, alright, or price action over here that's happening is called a divergence, alright. And once we have a divergence and we see that price has break its previous midline, which is called neckline, alright, what we do is we pull in our Fibonacci tool and we want to aim for a 61.8 retracement, alright, which is right here. Alright, so just hide the text. Alright, so should price decide, right, to come back up towards this level, alright, around the 0.7725, we do expect a rejection of this to form a lower low, right? But having said that, we have a major news, which is the RBA rate statement tomorrow, so we are not really sure whether price will pull back so deep, alright, up to the 77.25. So this is something that you just have to keep a watch as to what will happen for tomorrow RBA statement itself. Right, so this is the first setup. Alright, the second setup I want to bring you through is, let me just clear this then, alright. The second setup on the similar pair, alright, that we want to show you is a pattern setup. We have a bad pattern. Right, so you have X to A to B, a retracement of 50%. Right, that gives you a valid bad pattern, and the bad pattern completes at the 88.6 level. Alright, right there, 7740. Alright, if I drop in the horizontal line so you can see it clearer. Alright, so this is the level in which we are interested. So if you compare the bad and the previous setup that I showed you, let me put the right tool. Alright, we are looking at this region. Alright. So they are pretty close, alright. One is at the 7740 level, one is the 7725 level. Right, so this is what we call a potential area in which you want to watch out for any price action reaction in terms of rejection, showing that price will continue towards the downside. Alright, fundamentally we are bearish on the Australian dollar, simply because CPI came in last week, was a huge miss of the expectation, and we do expect some easing pressure going on to the RBA itself. So we are definitely bearish on the Australian dollar. Right, so these are two setups. Let me show you another new strategy that we are currently adopting and using as well. Alright, it's mainly the breakout idea. So what we are waiting for is, this is the previous low, right? So what we are waiting for is that should RBA decide to ease and cut its interest rate tomorrow, we definitely expect price to drop further lower. Right, so what we want to do is, should price break this previous low, that's where we're going to enter a sell trade, right, to continue riding on the trend. Right, so this is a pretty new strategy that we just started using. There's not much in terms of forward testing data, but overall in terms of the past 2 weeks that we've been using this strategy, we have been profitable so far. Right, some break-even trades, some losses, but overall we are still making money out of this strategy. So I shall eventually do a video to share with you this specifically on this strategy itself. But let me do have some more in terms of forward test data to showcase that this strategy really works and such before I share more with you. Alright, because the idea is, if I just share with you any strategy that we start developing, eventually it might do you more harm than actually benefit you. Alright, so with that, these are some of the levels for you to keep an eye on for tomorrow RBA. And with that, if you have any questions, feel free to drop them below in this comment under this video, or if you like, you can email us, follow us on social media, Facebook, etc. Right, and with that, I'll see you in the next video. Trade according to your plan, manage your risks, and I'll see you soon.